Hi guys, sorry. I was just making sure I could record this, so I had it for everybody else who couldn't make it. Thanks for coming on. Apologies for that. I'm getting used to this Zoom. There's a little technical difficulty in my part there. I mean, there's not been loads happening. I mean, we've had quite a bit on the COVID-19 um, talk of what's happening on the SEISS, which is for sole traders. And Steve has actually sent out an email to everybody who that impacts, that we know it impacts. That's if you're basically a sole trader and do self-assessments, what we do them for you, and your potentially P&L income. Accounts for that. So there's ways that things you will need to do. We can't help you as much as we've done the furlough scheme, and Steve will go through that in a minute in more detail. The other one is these bounce backs. They came into effect this week. Now, I think they're amazing, personally. There's some questions on that again, just because for me, it's up to 50,000, 25% of your turnover, and it's free interest for the first year. You've also got the fact that you don't have any redemption penalty if you pay it all back at once. So even if you don't need it and you have it, then come at the end of the year, you pay it all back. You just had it around in case you do need it, then it's not cost you anything. If you do keep it, it's a 6-year one, and for 6 years, sorry, term, and it's 2.5%. So it's really quite cheap. I've never seen anything so cheap for businesses. This is almost in the realms of mortgage, is at the moment. So it's very good. So if you think you might need it, or you even want it for expansion at this moment in time, if you think of expanding your business, it is worth contemplating it. Just make sure you don't, if you are just not sure what to do with it, just keep it in a savings account and use it as you need to. As long as you can do the 2.5% repayments next year, you're fine. And it's over 6 years. So for me, I'm doing it for Naylor Accountancy just because I would like to expand our business. I'd like to have the cash there. And it's not costing me anything for the first year. If I decide I don't want to use it, I'll just give it back. And even I don't, it's 2.5%. I mean, it's so cheap, this money, and it's really worth using, even if you don't need it, just to make sure your business is on track, just for expansion or in case things don't happen the way you want it. That's from the bounce back. People have actually got them almost straight away. A few days in, there have been few issues with them. They are just forms. They're really easy to fill in, and you really should just go through your bank. If you have a problem, let me know, because I do have some contacts with other people that do, as in banks that do this, not for their own clients who you may be business banking with, but your business bank should be able to do that quite easily. The other thing is just, I mean, I don't know if you've heard the news this morning. The Bank of England have just sort of said that I'm just reading it now, that the UK could shrink 25% this quarter. The bank warns. I mean, it's not surprising. We've all stopped working virtually. Pubs, restaurants, theatres, and a lot of people are working from home, so they are carrying on. But a lot of people aren't working. I've noticed on the A26 here where I live, which is the main artery into Tunbridge Wells, that's got noisier this week. And it looks to be tradesmen, so a lot of tradesmen, but there's some people going to work. So things are picking up around my local area, which is Sleepy Tunbridge Wells. So it may be also picking up wherever you are as well. And so people are looking at doing that. And then the other thing is that the bank said was they're predicting a 14% fall in GDPR in 2020 and rising unemployment. So that's what they're predicting at the end of this year, which is, quite a big drop quickly, but it could be sort of a good bounce back is what they're predicting, even with that 14%. So let's see how it works. The big one is retail. Obviously, retail, people going into shops, people aren't aware of that. The other thing to sort of just note is it's potentially they're going to give a message on lockdown sort of ending and going back to work. So I'm sure you all got plans potentially of how to do that, how to do some isolation, and we're going to get some guidance hopefully from the government this weekend as well, or Thursday, or today actually, potentially. Um, and we'll know more what that entails. I know I've got Dee desperate to come back to the office, um, so she'll be desperate. I'm not sure about Steve because he has a bit of a longer commute, but there will be people desperate to come back to us. I've heard of other people, their business owners and their employees are desperate to get back to work as well, just to get into the office and socialise again, as well as just get on with normal life. So it's definitely worth obviously having a plan for that. Then the other thing is just the main one is, I don't know, I'm just going to get Steve just to talk about the SEIS loans. There is another thing, just there's an extension of the grant for some retail sector. Steve will talk about that. That's the small business loan grant, which is given through rates. We had Ben, you asking about that. So Steve will just mention it. It is only guidance at the moment. There's no real bones on it. So we'll just discuss that in some detail that we can now. All right. So you do put the questions in. The first one I'm just going to ask you, Steve, is on the SEIS. If you could just sort of let people know more about the SEIS.
Right, the SEISS, the Self-Employed Income Support Scheme, it's intended to provide grants in a similar way to the way the furlough scheme is providing grants for employed people. It was originally not expected to be up and running till June, but apparently that is now going to be taking claims from next week. I've we've written a couple of blog posts on the qualification criteria, but the main ones that you were self-employed in the 18-19 tax year, you're still self-employed now, and you've got self-employed profits more than 50% of your total income and below £50,000. The calculations will be done by HMRC automatically on this because they are based on the taxable profits that have been submitted on tax returns. So nobody that's making a claim will need to put a claim amount. The big difference between this and the job retention scheme is there is going to be no way for us as agents to make applications. At the moment, the only announced way of making applications is through a personal tax account online. Now, not all self-employed individuals will have a personal tax account. This, one of the reasons that they engage in accountants like ourselves is because they don't want to have to deal with their own tax affairs. So one of the things we've done, because we will not be able to make this claim on their behalf, is circulated an email around all our eligible clients, telling them how they can set up a personal tax account, offering support as much as we can. We can't do that on people's behalf, partly because to set up a personal tax account on behalf of an individual would actually be fraudulent, and also because there are ID checks that are done as part of the setup that we would not be able to pass. But the claims they're going to be staggered, so individual taxpayers should be contacted with the date of when they are expected to make a claim. So starting the 13th and running to the 18th of May. So there was a recent blog on our blog post. So even if it doesn't apply to you, if you know someone that does apply to it, that covers the criteria. It's got a couple of links, including to the eligibility checker tool that HMRC supplied, where you put in your UTR and national insurance number, and it does a quick yes/no as to whether it thinks you're eligible for the scheme, allowing you to appeal a no that you think is incorrect before the claim goes in. But I say I don't think it applies to anybody that we've got in actually watching at the moment, but say if you do have friends that are self-employed, you think they help, point them towards our blog. There's the summary of everything they need to know there, with a couple of helpful links if they're struggling to do it ourselves. Obviously, we will be supporting clients as much as we can. We just literally are not able to do the applications on this one.
And it's just worth noting, if you know anyone who does do it, and also if any of you are watching this video, you will need your UTR, personal UTR, and your NI number to do this, I'm sure, just to set up the gateway. So just contact us and we'll let you have that if you're not sure what that is. Hopefully you will see it all on your self-assessment form that you've already had in the past, but if you do need it, let us know. You had a question, Bruce, just on the bounce back loan, and it was just on how, how do you apply for the bounce back loan? It's literally just online. So for Barclays, it's just online. Santander is just online. I think they're all just online. It's just a very, very simple form. You have to tell them your turnover. So your turnover isn't your profit. Some people are getting mixed up with the profit and the turnover. So it's your full turnover, and you can only go up to 25% of it. As the max. You'll be fine, Bruce. But and the maximum is 50,000. So it's definitely worth having it for a business. I would recommend, and then just pay it back after the year if you don't need it, or if you would like to keep it on, then do. It's actually the thing. You can obviously defer tax payments, like on PAYE and things like that, all the way through. But when you keep doing that, it's like just a month, and you still have to pay it. So in my head, I would rather have this as the main one, and then if I do need it, I can go to HMRC. I'll be doing the VAT. I'd always do the VAT for this period that they're allowing deferral until March, 5th of April next year. So definitely do that one, and you can do the others as well, but you still have to pay them, and then you have to make sure you are doing it, and you pay interest on it straight away. So you will be paying, I think it's 3%, 2.5% maybe anyway, but you're paying it on what you owe HMRC. Whereas this way, you don't pay anything for a year, and then after that, you'll be paying 2.5%, which is probably less than what we pay HMRC anyway. On the VAT, just to be very clear, the VAT when they're allowing the payment not to be paid until 5th of April 2021, you don't pay any interest on that part. Any of the other ones you will be just in the pro rata of the amount that you have owed for the period that you've not paid it. So just to be very clear on that, that is an option, offsetting your other taxes, but to me, the loan is the better option if you need only one of them, and then just pay it back if you need to in a year. Hope that answered your question, Bruce. If not, just please put it in there. The other one I failed to mention also is the SEISS furlough. There's talks, and they're saying they're talking about it in Chancellor's Checker. I'm going to sort of mention about it, getting people off the furlough and going forward, and what's going to happen. Maybe they look at a Germany type model where that they can work 10% of the time or something, or whatever, in 1 day a week or something, and you still get some furlough. But they're looking at weaning potentially people off it. We have got it until June this year, so we will be coming to you on the furlough around the 20th, like I said before, with the people that you have already on furlough, and just checking there's no one else, and that you also sign it off as you have before we actually report that to HMRC, and we'll be doing the same in June as well. Then we'll see what happens after that. We don't know if it does end then, so whether they just end it all or carry on slightly. I'd assume they probably will carry it on to some degree. It may be partial furlough. It may be some industries fully able to furlough. I don't know. We will find out. And they're supposed to be telling us next week, Sunak. So let's have a listen out for that then. The other one was, I had a question on bookkeeping of a furlough. We did have that last week from you, Mark, as well. But what it is on the bookkeeping, we are creating, when we furlough, if we're doing furlough for you, we are creating other income. So a line called other income without VAT, and it's just called furlough grants. And then we allocate it there. And we'll do the same for the small business grant, which is given by the council for the rates for your offices. We'll have one called the small business grant, and that will go there without VAT, because you don't charge VAT on these, you just get them in. We have to, as businesses, pay corporation tax on these grants that we're getting in. So it's not like something you just put on your balance sheet, which we normally do on a grant a lot of the time, because you have terms and conditions on them and you potentially have to pay them back if you break them. But on these, they're given to you and you don't have to pay it back at all, ever. And you have to pay tax on it. So 18% corporation tax at the moment, as it currently stands. So we will then, when we do P&L, do your corporation tax, we'll bear that into account. All of these grants are there to help us as business owners with loss of income through this lockdown and through potentially, the economy going down 14%. So I hope that answers your question, Yen, on that bookkeeping. So what you do when the furlough comes in, allocate it to a new line, an income other line, and then it will just be reconciled to that at zero. And you'll see in your P&L at zero. Steve, there was a question which you were going to go into more detail on the top-up grants. It is very brief guidance. I know you've looked at it in more detail, so it's probably worth letting Ben know, because I know, Ben, you brought it up, so it's definitely worth Ben having a bit more of an idea, because it may impact others as well.
Yes. Already there have been grants available to businesses that are eligible for small business rates relief and rural rates relief, and also for there's extended grants for businesses in the retail, hospitality and leisure sector. But all of those have been tied to the businesses actually having a business rates account and business rates bill. So they're home working is still almost certainly not covered, because it's the home rather than office. But there are situations where business has a public presence, such as a shared office space, like we have, or someone that has a market stall in a regular market. So they have a public presence, but because they don't have a rates account, they've not been eligible for the grants that were announced already, because all the grants that were announced already were tied to the rate system. An additional amount has been made available to councils, called a discretionary top-up fund. This is mainly intended to go to businesses that are in this situation where they've got an office, they've got a workshop, but for some reason they don't have their own individual rates bill. Possibly it's the case that the landlord has the rates bill for an entire building that has several offices, several workshops in it, and effectively the rates is included as part of the rent those businesses pay to the landlord. But this new discretionary fund is intended to help businesses with that, where they have the costs of running a property, but they don't have access to the normal rates bill. Now, because it's discretionary, it is probably going to be a case of if you think you deserve a grant under this, you will need to approach the council directly. This is entirely new, so it's how you go about approaching the council at the moment. That is unclear. I would guess that using the business rates email, which on the council sites that I've been looking at for the more normal business rates claims, it usually appears on the same page as those claim forms to allow people to make queries. I would say that is probably the first place to make contact if you think that you are deserving of a grant under the top-up fund. This is a very recent announcement. If there is more information about how businesses can actually apply that for this comes available in the near future, then obviously we will be sharing that around to our clients. But yeah, as things stand, approach the council if you think it's worth it. The money is there, but it is very much down to the individual councils who it ends up going to.
Thank you. Thanks. Now, there's no real other questions or things I can think of that we need to sort of talk to you. As I said, these could be very quick. It depends on what's happening. I mean, we are potentially coming out of lockdown, so and there'll be quite a bit of news the next few days. So we'll be interested to see what happens there, and we'll let you know anything that's changing. We'll put in the blogs as well. So it's VE Day tomorrow. And I've shared this quote before, but I'm going to share it again. So I don't know if you can see, never let a good crisis go to waste. That's Winston Churchill. So what we're finding is a lot of companies that we deal with are actually seeing this as an opportunity as well as a threat. And they're looking at what they can do to come out of it stronger and actually take market share or grow their businesses better afterwards. So, and also looking at other ways of potentially earning income, say online. So we have a lot of people starting to do things online, which they never did before. So all of a sudden, they've got more of an online presence. And also just with this, the bounce back loan as well. I mean, the opportunity there is you can utilize that to create your business going forward, and whatever it is that you might need to do, so you can have some capital. There's also an opportunity here that some businesses unfortunately will go to the wall just because they probably don't have the ability to trade through it. They may not have a lot of cash. They may have done very poorly last year, so it will just impact things even more so. So there are clients of ours that are contemplating actually looking at acquisitions once they have a better picture of what the situation is. So VE Day tomorrow. I hope you all have a good VE Day. I know in our little village here they are supposed to be doing things. So we're supposed to be going out toasting and singing Vera songs. So I'll see if my wife will force me to do that. She is saying we're doing it. So please, have fun. So I've just got one more question here. Is there? Oh, that's interesting. Yen is saying the Tannish character for crisis is made up of danger and opportunity. So danger and opportunity. That's very interesting. So that's crisis, and that's what it is. There is danger, but there's also opportunity. Well, I hope you all have a very good long weekend, VE Day. I hope you enjoy it, and Vera Lynn in the streets! Exclamation mark. Let's see what happens there. It will be interesting. Anyway, lovely to speak to you all. Hope you all have a good weekend and enjoy the good weather. It's supposed to change on Sunday, I keep being told. So enjoy it whilst it lasts. Happy barbecues now. Right, take care. Bye.